Hey everybody, welcome back to the podcast. This is episode 3 of the Build Your Wealth series, and this is stocks. So let's not waste any time and get right down to it. So, what do I use to trade with? So, I use a mixture of Fidelity, JP Morgan. You can use TD Ameritrade. I do not recommend the mobile app stuff to keep your stocks. Things can go south, and it's a pain in the butt to get those stocks transferred. So I use Robinhood, oddly enough, to option trade. That means buy puts or call options. Call options are when you think the stock is going to go up. Puts are shorts when you think the stock is going to go down. Now, I highly recommend not doing this if you're a beginner, and this is kind of like a beginner's building your wealth crypto or a stock video. So I don't recommend it. If you are an experienced trader, do it. Good luck to you. If you want to move toward doing that, in the prior crypto video, there's a pattern trading book that's free that you can download. You can buy this Elliott Wave Principles off of Amazon, and that will kind of get you on the right track. I'm not going to cover fib retracements in this video because this is a beginner's building your wealth. If you want that information, YouTube fib retracements, how to use on YouTube or Google, and there are multiple options there that can make you happy. So, different types of stocks. You've got a dividend paying stock. Those are typically high net worth or retirees that are looking for yield, not gains. So that's somebody that's got a $500,000, million, 2 million, 3 million, whatever it is, that's happy making 6%. They don't want any risk. They just want the 6%. Then you have tech. Tech is speculative and offers mostly no yield. You get your gains from growth, right? Hence growth stocks. You've got your industrials, Caterpillar, John Deere, manufacturing, stuff like that. Consumer goods, Procter & Gamble, peanut butter, Smuckers or whatever, all the food stuff. Precious metals, gold, silver, palladium, so on. So you got those different sectors that you can buy into: energy sector, ExxonMobil, etc. And some of the energy plays offer dividend, but I don't know. It can be volatile as well. So gauge your risk, and that's how you proceed, right? So I want to focus on how to buy, what to look for. So if you got my pattern trading book, you kind of know what to look for. So this is the SPX, which is the S&P 500, and it is traded as an index under SPY. Same with the NASDAQ is QQQ. So if you're first starting, those are the two that I recommend. Once you get familiar, once you build a large enough position there and you feel comfortable about doing research into individual stocks, then let that be your training wheels and then move on. So in pattern trading, and there's also harmonics. You can also look up harmonics on YouTube or whatever. There's several videos that cover nothing but harmonics. But typically those are like a W pattern and then a pattern that looks like an M. W patterns are typically bearish. M's are pretty much, it lets you know you're getting close to the end of the move and the stock is starting to stabilize. Here on the SPX, we're trying to form a head and shoulders. We have a gap up. Those typically get filled. And so I think the measured move here, we're going to come down and retest resistance at around 36. So if you're in the QQQ, let's look at the SPY. So the SPY is kind of doing the same as it should. So if you wanted to, you could look and say, okay, I get you, Beefy. This kind of looks like a head and shoulders here, a little slanted head and shoulders. Where will this take us? Take us back down. Oh, wrong one. Should take us back down around support. And then we'll see how it reacts there, right? So if we're looking at this at a bigger scale, look at this. That is some decent support. Caught a little bit here. Will it hold? I doubt it. So you come down here and you say, okay, I think that's a good area of support. And then you can come down here and say, okay, that's a good area of support. All right. And then down here. Yep. Yep. So you go through here and look, and just remember the last video we did in the crypto, right? We look for sideways action because that typically means support or resistance. So let's say you have $5,000. You could do a quarter of that here, a quarter of it here, a quarter of it here, and then a quarter of it here. And so your dollar cost averaging down off of supports, right? I don't think we'll get this low. If we get this low, it's really ugly, and you'll probably want to save that cash. But these three levels here would be prime areas to start building positions. And then when do we take profits? So we don't want to be the person that rides this all the way up and makes good money and then rides it right back down to loss, right? So when this thing eventually, let's say it makes its way down to here, right? And usually there's a reaction rally, or when the put volume, the short volume gets too great, it's easy for market makers to create a short squeeze. And when that happens, the market will shoot up because it's squeezing people out of their positions. So if we get a move, come on now, up, right, as a retracement, that would be a good way to take profits, right? And then if we come back down, and let's just say we put in what they call a higher low, you can build positions there. But guess what you've done? You've created more capital for yourself to add more to your position, right? Now, there's no guarantees in any market, but if you've capitalized and you've took profit, you don't have to take all your profit. You can cash out 50%. That 50% will allow you to add more in case of a retrace, right? And it might not happen this quick. I'm just saying, I think we're going to trade sideways for a little bit, and create some kind of bottoming process. But this shows you where to take profit, right? When you see this kind of movement and this breaks down from that, that's going to be future resistance, right? Not forever resistance, but it will be a meaningful area for you to take profit and then catch that retrace for possible upside. QQQ, same way. And this will fold, and I'll show you exactly kind of how I look at something that's bust down and there's no prior support below it. All right, so coin is one stock I've got my eye on and I plan on adding. So it formed like a little bear flag here and then broke down. The measured move of that is around 10 bucks, 11 bucks. Yeah, around $10.50. So it's going back and retesting that bear flag as possible resistance. When that happens, it should go like a B, C. Three-wave move down. A, B, C. Right? So that's where I plan to add. So I included a pattern trading book that's free for download on the last crypto video, and the link's in the description. Go back there, download the book, and study it, and use this once you've selected stocks to purchase. Like in the last crypto video, diversification sucks when you don't have a lot of money. And it's even harder in stocks. So what I recommend is pick SPY or the QQQ if you're a beginner. Buy on retraces. Let's go. Don't ever buy green candles because you'll probably get red ones. But buy on these retraces. Buy at these critical support levels. All right. Dollar cost average. Don't ape in. Ape in means you just go all in. You got no patience and you just go on. If that happens, you're going to lose money, guaranteed. So we've already talked about coin. Let's just look at Meta, right? So gap fills typically always fill. There is a massive gap fill with Meta from $250 to $291. Do I see Meta cruising all the way back up here to fill it? Not right now. I like the company. I think it has tremendous progress or prospects, but I think we fill this gap up here at around $30, $35. That's where I'm a buyer. You go A, you created a gap down. B, you filled the gap. C, you come down here and fill the bottom gap. And then I think we trade sideways, and I think eventually Meta reclaims this gap. Ultimately, if you buy here and you said, okay, I want to take profits. I want to take profits here, here, and here. All right. I'm going to take 50% and I'm going to take profits. So if we do reclaim that level, you take profits, right? And if we do hit that level, we're probably in another printing cycle. So that's an opportunity to rotate that, build your position on another stock that's getting ready to come in season, right? So when the Fed pulls the money printer away, you're positioning yourself in another sector that's primed for growth that hasn't took off yet. Don't watch CNBC or Fox Business for stock tips. That's how you get wrecked. They only talk about a sector after it's up 20%. You buy when no one's talking about it, right? You sell tech when everyone is telling you to buy tech. And then you buy industrials when everybody tells you that stuff's dead, that nobody wants it, don't touch it, blah, 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 right? When they're telling you that, they're buying it. And they buy it at levels so it doesn't pump the market and set off red flags, right? They build their positions slowly. You must do the same, right? That's how we build our wealth. So if you're, this is Tesla. If you're more risk averse, if you've seen the pattern trading book, you'll know that's a head and shoulders pattern. that Head and Shoulders pattern has a measured move down to the break of around $55. In my humble opinion, that would be a great spot to add if you believe in Tesla's product. There is a gap around 265. And what I think will eventually end up happening, this will be another video, and it will describe that, but I think eventually that gap fills along with Meta's. So these are ways to maximize your money. You got to believe in the management team. You got to believe in the product. You got to look at the margins. You can't just buy something assuming that it's going to go up. It's got to be a good company. I think between Elon and Zuckerberg, I think his vision of VR is probably ahead of itself. I think it will catch up, and I think what's coming will support Tesla. This will be in another video, and you silver guys will love it. John Deere, I took a put when I seen this gap up. This gap up was around November, I think. And around November 20th, and I think that was when some of the tech stocks and stuff like that started crashing. And then I took profit on the put around here, I think. It was 416. But if you look at the harmonics of it, right, that is a bearish bat. And so it should come down to around $171. There's no real support here. It's Cheetos. So you don't want to be the person buying here at 400. You want to be the person buying at 170 and then selling it back to the person at 400. Build wealth. Don't buy something and hold it. It's called an New York Stock Exchange for a reason. Exchanging stocks for money. Don't let the big boys take your money. Take profits. You don't have to be a pro trader that sits in front of a computer 24 hours a day. You can simply buy at these levels and wait for a pump into resistance and sell into resistance. So when this thing comes back down, it's probably going to test this as resistance. Prior support can turn into future resistance. So when we buy down here, we want to plan to take profits around here, right? So the best thing to do is not complicate it. And a lot of these people selling stock trading courses and stuff like that, how they justify the cost of the program is they complicate it as much as possible to get you into the program and feel like you constantly have to do this. There's like I said, the free pattern trading book in the crypto, Building Wealth with Crypto. Go to Amazon, buy Elliott Wave Principle book, buy a Fib book. Start learning this stuff. You can do it very cheaply. But the most important thing with stocks, where that's not as volatile as crypto, is it's important, just like crypto, to build your position in stocks. So when you capture those moves, you're not making $100, you're making thousands of dollars on these moves, right? Then when you take profit, yes, you got to pay tax on it, but you can redeploy that into other stocks at these lower patterns or at these lower supports and keep building your positions, and eventually you'll build it up to where you've got $50,000 to $100,000, $200,000. It doesn't take that long. Once you get that initial profit taking, and before you know it, when you start moving in and out of cycles, you'll be like, holy smokes. This has worked out really well, and it's very little effort. Now, the main thing is taking profit into resistance, right? Because we don't know what may happen after this move, right? It could come up here and bull market be over, right? We don't know. It can come back down here and then launch back off and break through that resistance. We don't know, right? But what we do know, if we don't take profits and we get rid of greed, don't think, oh, it can go to 500, it can go to 600, it can go to 700. Take profits. Take 50% in resistance. Take that 50% and buy back down, or go to another sector that's down and invest in it and wait and take profit into future to that product's resistance, right? So that's the name of the game. And the same thing with Tesla here, right? I got a sad face because these are all people that's bought Tesla that are stuck here, right? And so when this thing pumps up, they're going to be eager to sell and get out of their positions, right? It's going to have a hard time cutting through that resistance. So why roll the dice? Take 50%. Don't risk it. And then if you've got conviction and that stock comes back down, add to it. You can buy more now. And that's how we build wealth with stocks. And then after you get to a certain point and you say, I want to move to a dividend paying stock, I've got 200 grand, 250 grand, whatever, I want to move that into a dividend paying stock, you're earning 6% on that 250 grand. So that's the name of the game. Taking profits into resistance, buying critical supports. It's as simple as that. You don't have to go out and spend $30 a month on a trading course. Those are scams. Those people can't trade. They can't make money. You know how they make their money? Selling you their worthless garbage classes. Also, gang, tradingview.com is free. I highly recommend going over there, creating an account. Takes no time. If you want to pause the video and go through here and write down the ticker symbols, you're more than free to. Also, things to add is the VIX, which is the volatility index. This will let you know you sell here. This is what you typically want to do. You want to sell down here and buy up here. So when the VIX spikes like this, the markets are down across the board. So that's a good time to go shopping, right? And then when we get back down here is a good time you want to start taking profits. Another thing to look for is the DXY, which is the dollar index. It is measured against a basket of other currencies. When the Federal Reserve raises interest rates, the dollar typically goes up because more people find it more appealing to own treasuries that pay a risk-free 4 to 5% interest versus holding a tech stock that pays no dividend and the risk of losing money, right? When the Fed is lowering rates, they're more prone to take risk as the institution. So that's when they go into the Teslas and the Metas and Coinbases and all that stuff, right? So that's another way to play it. When you see this dollar going down, that means typically that it's more risk on. When the dollar is going up, it's more of a risk off market. Risk off is dividend stocks, energy stocks, or not so much energy stocks, but consumer staples, stuff like that, right? Treasuries. You can add TLT to your list. That's a 20-year. but that's the risk off. Risk on is your Teslas, your Metas, your Coinbases, and stuff like that. I'm sorry. Risk on is Teslas, Meta, Coinbase, stuff like that. Risk off is your consumer staples, TLT, your treasuries, stuff like that. All right, gang. That's it. I think I covered everything. If you enjoy the video, please like and subscribe. I'm giving away 250. I don't know what yet, crypto, or I don't know how we're going to do it, but we'll figure it out once we hit 250 subs. And then also, we're a small channel, so if you could like the video, subscribe, it'll help us grow. But everyone, I appreciate your time. Hope you enjoyed the content. We'll see you on the next one. Beefy out.